Loan estimates. So let's go over what actual loan estimates are. So a loan estimate is a tool that you can use to figure out how much each lender is actually charging you for a mortgage. So when you get numbers from lenders, the form they're going to send it to you on is going to be the same universal form, and it's a loan estimate form. This is going to be their official form. Now they will have other forms. Sometimes they'll send you some numbers on just to give you an idea, but when it gets down to the nitty-gritty and disclosures, they're going to send it to you on this form. And so let's go through this form and show you how you can look at it. And I found this form. This is the one you can look at on the CFPB's website. The consumerfinance.gov is where you would go to find the loan estimate and look at it for yourself. But let's drive through this. I want to show you how it looks. So this is the first page of it. This is what you would see. So you're going to see on here the loan amount, or the loan amount, the interest rate, and the principal and interest monthly payment. So as we go down, you're going to see some projected payments, and what that is in this case we're putting down less than 20% down, so we have mortgage insurance. So you'll see the principal and interest payment plus the mortgage insurance plus the escrow gives you a total payment. And then you're also going to see after this period of time they're projecting the mortgage insurance will be gone and you'll just have the escrow payment, and that's what your payment would be. Some people see this and think they have an adjustable rate, but that's actually just because something's dropping off. Down here you'll see the escrow amount. So this is the taxes and insurance that are included into your payment. So you have your raw payment here, your interest rate, and then you have your escrow. So that's going to be on your first page, and it's going to break down your closing cost here and your cash to close. Your cash to close are going to be your closing cost plus your down payment. So let's go to page 2. This is where it's really going to break down for you. So we go on to page 2. This is the important part. This is where you actually can compare lender to lender. This is where they disclose the fees. You'll see all the other stuff here, but this is where you look. Section A. This is going to show you what each lender is charging for that particular interest rate. So right here you see they're charging a quarter point. They're charging an application fee and an underwriting fee. So let's say you get another lender's estimate and they don't have the quarter point or an application fee, and they just have an underwriting fee of say $900. So now you can see here the total is $1,800 here, and lender B is offering it for $900. They're cheaper. That's all you have to do right there. That's going to tell you who is cheaper, because you look at the loan amount and the interest rate and this is going to tell you what they're charging for that particular interest rate. Down here are some of their ancillary fees that their third-party companies are charging. And here's where you'll see the appraisal, credit report, flood fees, or anything as such. This is where all that's going to show up. So those are third-party fees that are associated with that lender. It's not necessarily their fees, but it's fees that they know are going to be charged. So that'll be a variable too. The rest of it is technically really estimated from the lender, and this is where lenders that may have higher fees here may lowball these fees here, trying to make themselves not look as expensive as their competitor. So you can see here in the title fees section C, they're going to break down the inspections, title costs, title search. There's going to be a variable of those kind of things. That's what that's going to show up. Up here at the top, you're going to get your governmental fees. Those should be pretty standard as far as what they actually are, as far as what the insurance and taxes are the transfer taxes and everything would be. In Florida, we're going to have transfer taxes, so that's where you're going to see those. Those are going to be pretty standard. And then you're going to see where they're going to estimate what your insurance would be to set up and how many months they're going to collect to set up your escrow account. The escrow account is where they are going to pay your taxes and your insurance for you out of these accounts, and they set them up on a deposit. So they'll set up a certain amount of months on deposit to make sure they have enough to pay it when it's due. Here in Florida, or in Alachua County, at least, we pay our taxes on November. So you will see the property taxes depending on when you close on how many months they'll collect plus 2 months reserves. The insurance, they're going to collect 12 months to pay the insurance, and then they're going to collect 2 to 3 months in reserves just in case the insurance goes up next year and they have enough to pay it. So that's how you'll see that be set up right there. And then the next section you'll see your total closing costs, and then you'll see the calculating the cash to close. So we'll see total closing costs $8,000. That's including all these fees. It's $8,000. And then you're going to see the down payment. They're putting $18,000 down. They've also put $10,000 already down on deposit on the house, so you minus that out. Then we have $16,000 left to close the loan. That's how that works out. So on the next page, just want to show you on the next page, it's going to break down you're going to see your APR. I wanted to point this out. APR is a quick way for you to figure out if there's a lot of lender fees on a loan. So if this one had the quarter point plus the, what was it, the application fee and the underwriting fee, right? So these are fees that are associated with the loan. The interest rate on this one was 3.875. That's your interest rate. That's how much you're paying in interest on it. But then you figure in those extra costs, they give you an annual percentage rate. This is a fast way for you to figure out if there's a lot of fees. 4.274 is the APR. So when you see 3.8 and then you see 4.2, that's going to tell you that there's some fee attached to that. If it was 3.8 and it was 3.99 APR, that means just by looking at those two, you're going to know just between that one and that one, you're going to know which lender was cheaper right off the bat as far as their fees. That's just a quick way for you to be able to see it before you even get into these numbers here to look at it. So once you see the APRs, you can compare APRs. You'll know who's cheaper and who's not. And mortgage insurance is figured into that as well, but that is how you can quickly just look at the APRs to figure out which is cheaper. But this form, the loan estimate, is a great way for you to compare lender to lender, and it's right on the consumerfinance.gov site is where you can see it. There's a lot of tools there you can use. So anyway, this is a great forum for you to compare and see numbers, and hopefully this will clear up those numbers a little bit for you and let you know what you really need to look at and what parts of it are really more estimated, what is the actual cost. So it kind of gives you an idea of where the numbers actually are. Hope that helped.